Hey everyone, it's Justin from Number Crunch Nerds. Today we're going to be talking about the 1099K. We're going to be putting it into TurboTax, and we're also going to be talking about the three main issues that you want to watch for when you get a 1099K. This 1099K, that's the whole $600 thing that you might have been hearing about, like on Twitter or social media somewhere. You know, the IRS is going to be coming after everybody with $600 or more in their Venmo account or their PayPal account or Shopify or whatever. This is the form that is related to that. This is the form behind the scenes related to that $600 issue. So if you use Shopify or PayPal or Venmo or any of them, right, they are payment card and third-party network transactions. That's what this says right here. That's what this form is for. This is for those companies to report to you information about the transactions that you had in there. And for a lot of you listening who run small businesses and you collect payments through those payment processors, it's possible you've received a 1099K in the past. And so these three main issues, if you haven't considered them in the past, it's worth considering them now. If your business is not up to the level of receiving a 1099K, and the threshold is $20,000 of transactions through 2022. So for the 2022 tax year, the rule is still you have to have $20,000 in transactions within each payment processor. So if you have $20,000 or more in PayPal, you're going to get one of these from PayPal in 2022. Same with Shopify, same with each one. So it's $20,000 in transactions in each payment processor. However, starting in 2023, that's when the $600 threshold kicks in. So it means that if you have just $600 in transactions at a payment processor, you're going to get one of these. So the time, if you don't get one for 2022, the time to start planning for it is still right now in 2022, because you will most definitely be getting one in 2023 if you have any transactions of significance over $600 going on in your small business. So that's what we're going to talk about today. I have a copy of the 1099K here. This is what it's going to look like. The three main numbers that I want you to look at. In particular, really the main number is going to be this box 1A right here, the gross amount of payment card and third-party network transactions. For this example that we're going to do and run through TurboTax, I'm going to just put $25,000 right here. That's over the threshold for receiving one of these in 2022, and it is most certainly over the threshold of $600 for receiving one in 2023. So I'm going to move this out of the way in a second so we can get to TurboTax, but I just want you to look over here at this work paper, and I just want you to see these numbers that I took off the form. So here's the $25,000 out of box 1A. I put that right there. Here's federal income tax withholding of $3,000, which I just put right here from box 4. And then if there's any state income tax withheld over here, we're going to put that right there. And there may be other numbers populated on here showing like the breakout by month and so on and so forth. But the real numbers that you're going to need for tax return purposes are going to be the numbers that come out of box 1A, 4, and 8. Okay? So I transfer those into my work paper, and I'm just going to move this out of the way so we can have some more space here. And when we get into TurboTax, all right. So here's what we're going to do. First, we're going to put this information in TurboTax, and then we're going to talk about the issues you need to watch for. So to enter this information in TurboTax and make sure it's showing up correctly, I'm using right now the TurboTax Home and Business Edition. This is the 2022 version. So we're in the Business tab. We're going to hit Continue. We're going to choose, I will choose what I want to work on myself. All right. And this is going to be under the first section here, Business Income and Expenses. So I'm going to click Update that. Now, you should already have your small business listed here. Okay. If you don't, you click on Add a Business down here, and you will fill out some basic information about your specific business, and then it will show up right here in this section. Once it's here, then we're going to click Edit in order to enter this information. All right, so the 1099K is under this section right here, Business Income, 1099K. A variety of things are under here, including the 1099K, so we're going to click Update that. And then we're going to click Update right here. And I've already entered this one, but we're going to go back and see all of the information so I don't have to type it in while you're waiting and while you're watching. Okay, so let's just go through it. You type in the name of the payment processor. I'm just going to use Shopify. You type in their federal ID number, etc. So box 1A, 25,000. That's the 25,000 that I had. Now, this is where it gets interesting. Okay, there's going to be a little checkbox here. I'm going to uncheck that for a minute. Okay, it says this amount in box 1A is too high, or it includes some personal expenses or personal transactions, right? And if you click on this box, it gives you another box here to enter information. Enter the amount that shouldn't be included. Okay, so let's talk about, of our three main issues that we need to watch for, let's talk about the first one. The first one is number one, box 1A may include personal transactions. If you have personal transactions running through Venmo or through PayPal or through any of them, right? Maybe you do. Technically, you don't want that. If you can avoid it, you should try to have two separate payment processors, one for your personal transactions, one for your business transactions. And while that's nice in an ideal situation, it's obvious that many small businesses are not doing that, and it's quite possible that you have commingled transactions in there. You have some personal stuff and you have some small business stuff. You know, it's until your small business grows to sufficient size to even warrant dealing with having two different PayPal accounts and two Venmo accounts and separating these things out. A lot of people just don't do that. They just run both personal transactions and business transactions through. So the problem is going to be that Venmo and PayPal, they don't differentiate between a personal expense and a business expense. Okay, there's $25,000 of gross transactions running through there, but they don't know if that's personal or not. They don't know if that's business or not. And so what happens is, if you take this $25,000 right here off the 1099K and you put it right here, and it includes personal transactions on the income side. Let's say a family or friends sent you money for whatever reason. Let's say you made a personal purchase of something and then you got a cash rebate, and that cash rebate went into your Venmo account. Well, if you include the receipt of some kind of cash payment from, or not even a cash payment, just any payment from friends or family, it's not a taxable item, right? It's money you got from a family member is not a taxable item. If you got a rebate on a personal purchase, that is not income. That is not a taxable item. But if you don't do something about it, it's all that stuff's going to be included in this number. And you're going to be paying tax on that when you shouldn't be. And that's the problem, right? Box 1A doesn't differentiate that. You, as a small business owner, are going to be required to determine how much of that is personal and not related to your business. So you can't just rely on that box 1 number and say, well, that's the number that I'm being taxed on, because then it's highly likely that you may be being taxed on too much. Like, you're overpaying, you're over-reporting when you don't have to. Okay, so like I said, this can include money received from family or friends, or transactions unrelated to your business, rebates on personal purchases. There could be a variety of things running through these accounts. Okay, and it's okay to back out these personal items, but the thing is, you need to keep good supporting records and supporting documentation, and you're not just like pulling a number out of thin air. You have to document, this is a business transaction, this is a personal transaction, this is a personal rebate, this is a business, this is income from selling something in my business. You have to make that distinction, and you have to keep track of it, and you have to document it for audit support. That's what work papers are for. Okay, so for this example, we'll come back to talking a little bit more about that in a second. For this example, let's just get through the entering the information. So let's say I've determined that in this situation, $2,500 of the amount that's included in here is actually related to personal items of income, right? So I got some money from a family member, rebates, etc. So I'm going to back out the $2,500 by putting it right here. The system will subtract this from this number, all right, on the Schedule C, which is your business tax return. All right, so this is the real item you want to focus on, as far as making sure you're backing out items that don't belong in here. Okay, because this is going to all be taxed. Everything in this box 1 is going to be taxed unless you back out your personal items right there. And then box 4, the federal income tax withheld, you want to make sure you get that in so you get credit for that. And then if you have any state information, you're going to enter it down here. Okay, so let's take a quick look here. The numbers I just want you to keep in mind are this 25,000 and then 2,500. All right, backing out 2,500. So let's go to the next page. So on the 10K summary, you're actually going to see the full amount. It'll just say the 25,000 right here. The system is not designed to make the adjustment here on this screen, but so the point is, if you look at this and you're like, wait a minute, it didn't back out the amount. It didn't back out that 2,500. Well, it did. It just didn't do it right here. Okay, so where we're going to go look at that is we're going to go up to the forms view, which is right here. We're going to go to Schedule C. Schedule C is your business tax return, which is right here. And then we're going to scroll down. This is just an information sheet. We're going to scroll down to Part 1, which is right here, Part 1 income. And we're going to go to line 1D. Enter the gross receipts reported on your 1099. And you can see right here that it's $22,500. So the system did correctly back out that $2,500 from the original $25,000 that I put in. So this is where you can check to make sure, it is backing out that amount that I said was not really a business transaction. Okay. Now, the second item that you need to watch for, okay, it's possible that box 1A may not capture all of your business income. You can be running your business perhaps using multiple payment processors. Maybe the customer has a choice. They can choose PayPal, they can choose Venmo, they can choose Zelle, or they can wire you money. Who knows? They could send you a check in the mail. There could be all kinds of possibilities on how you actually collect money from your business. So you have to just remember that a particular 1099K from one payment processor, in this case I said, well, this one's from Shopify, right? Well, that's only going to collect the gross receipts that ran through Shopify. So if you have receipts coming in from other places, you got to make sure that this may be the total on that particular K1, but it may not be the total for your business. So you just have to keep that in mind. That's the second thing to watch for, is that one 1099K is not necessarily going to capture all of the income from your business. And again, that's why keeping solid books and records is important, because if you rely solely on the 1099K, you may be at the risk of underreporting income. Right? Remember, in item 1 that we talked about, you might be at risk of over-reporting, like reporting too much income because you have personal stuff mixed in there. On the other side of that is you may be at risk of under-reporting if you're not keeping track of where gross receipts from your business are coming from outside of that payment processor. Okay? Or maybe you have some running through Venmo, some running through PayPal, and only the Venmo gross receipts go over the $20,000 threshold, right? And so you only get a 1099K from that payment processor. You don't get one from the other payment processor. And if you forget about it, then technically, you've underreported because you didn't put the income that ran through the other one on your return. Okay, or to say it more specifically, you just have to remember that you may have gross receipts in multiple places, and you have to keep track of them. And that's the point of keeping good books and records. Okay. Now, the third item that we want to watch for is box 1A may not account for refunds that you've given to your customers. Because remember, box 1 is gross receipts. Okay, gross receipts meaning before there was a return. So you need to keep track and make sure, like, number one, have I given returns? or have I given refunds for returns to my customers? And if the answer is yes, then you need to make sure that they have been backed out of box 1A, because it's quite possible that they haven't been. And that's where you're going to need to get the detail. Actually, for all of these, for all three of these items, this is where you need to get the detail of all the transactions that have run through that payment processor, so you can determine what is actually like showing up in box 1, because there could be a bunch of stuff commingled in there that you don't want. You either don't want it on your return because it doesn't belong there, or it might be missing some stuff. And another thing it may be missing is the refunds that you've given. Okay, so we're going to go back into TurboTax, and I'm going to show you where to put in a refund. So I'm going to go back to step by step right here. And down here in the last item in this section, income you gave back, right? So if you have a refund, it is quite possible it's not backed out of the box 1A number. You're going to have to know what it is by looking at the detail, and you're going to have to go in here, and here is just a simple, you type a description, you put an amount. For this case, I just chose $500 as an example. But that is something that box 1A on that 1099K is highly likely not to account for, because it's gross receipts. All right. So once you put it in here, you'll see your amount of refunds right here. And then if we go back to Forms View, which is up here on the right, we're going to go back to the Schedule C. And you are going to see the $500 down here on line 2, returns and allowances. This is where the $500 will show up. So you'll get a net amount, right? After all of that, we're down to $22,000. So in this example, right, this example was basically a K1 shows up from Shopify. It has $25,000 here. If you just slap $25,000 right here in line 1D, well, you're going to pay tax on $25,000. But in this situation, I'm saying, well, wait a minute. I got $2,500. So watch here. Here's my 1099K box 1A. Here's my personal adjustment. There's $2,500 of charges in my in this account that are not from my business. They're not business income. I don't want them on here. So I'm going to take those out. That's what we did a minute ago. And here's my work paper to support it. Okay. So then on schedule line 1D, that's what actually shows up there, the 22.5. And then I also have to account for any refunds that I gave, which are not adjusted out of this number. And so I get those in there, and then I have line 1D right here. Actually, I didn't change that. That should say line 2, not line 1D. Line 2, that's what that should be. And there it is right there, $500. Not line 2, line 3. There we go. That's what it should be. Line 3. There's the $22,000 that shows up on line 3. So the key is you have to get the detail for this, for all your transactions. You have to figure out what is being included in this $25,000. Are personal transactions in there? If yes, you got to back that out. Are refunds included in the detail but actually not backed out of this number? If yes, you need to back those out. Okay? And that's the point of keeping complete, solid, supporting books and records. All right? If you're interested in learning more about that topic, I have a complete course on how to do your bookkeeping for a small business and prepare a complete set of tax supporting work papers that will back up your return for 2 reasons. One, we just talked about, to keep track of your business versus personal income items and make sure that you're not actually overpaying or potentially underpaying on your return, because you may be including items of income that aren't supposed to be there or missing deductions. A lot of small businesses will overpay or underreport by thousands of dollars a year or more simply because their paperwork is disorganized. Okay, that's the first reason. And the second reason, of course, is for audit defense. If you have rock solid supporting documentation that backs up all the numbers in your return, then guess what? Just the optics of coming under audit and having all your ducks in a row, all your I's dotted, all your T's crossed, the optics of that is so much better than imagine coming under audit and you don't have any paperwork. You don't have any paperwork to like support all this, and you got to start digging things up and scrounging around and going to all these payment providers and downloading all this information and trying to organize it and hope that it actually sums up appropriately to the numbers that you put on your return. And this could be years later. 3 years ago, you put these numbers on your return, and now you're scrounging around trying to find documentation for it. If you're interested in learning more about my complete course on how to set up a full set of tax supporting work papers, there is a link below this video that explains all about it. You can go check that out. So that is the 1099K, how you get it into TurboTax, and the 3 main issues to watch for. Keep an eye out for that in 2023 for sure, because the threshold is only $600. My name is Justin from Number Crunch Nerds, and I will see you in the next video.